similar to Tom, I have the easy job. I'm just really asking the questions and turning over to you. So why don't we start with a little bit of housekeeping? If you could be so kind as to, let's start off by raising your hand in the participants area for me, and then I can call on you each to jump in on each of these questions. But generally, this first area, what types of recent technology, whoops, I'm just going to move my participant, there we go. What types of recent technology utilized by companies are creating new vulnerabilities and fraud risks that auditors could consider? And what type of technologies are fraudsters using? And we did hear from David, just to sort of kick us off in the discussion. He was talking about still there's technology that's being used by fraudsters to steal personal data. So perhaps there's some vulnerabilities in companies' computer systems and technology there that allows that. So that would include hacking, key logging, and other techniques basically designed to exploit vulnerabilities. And also there are some other areas that some of our other panel speakers talked about. But actually, over to you. If you could just raise your hand and let's get this chat started. Oh, sorry, I apologize. I was going to say as well that if you could briefly introduce yourself as you put forward your views on this. So nobody has any thoughts on this particular area, Angela, but I don't believe
so Josephine, this is Kelly Devine.
Hi, Kelly.
Hi, how are you? I apologize, I don't know how to raise my hand, and I'm wondering if others are experiencing the same. I was frantically looking around. So I did just want to comment because, so we're talking about I'm from Ernst & Young. I'm in our Global Emerging Technologies Standards Group, which is part of our professional practice group, and we're focused on emerging technologies and how we audit them as audit professionals, and when the client uses them, and also how we can actually innovate our own technology to use and further advance our services. So the first thing that struck me when I read that question was we are becoming concerned, and I think one of our panelists spoke about that, as to the client's use of RPA and AI. So while often there will be a benefit to them using those because it will automate, and take the human out of the loop, it will also reduce the number of humans, and therefore allow for, or perhaps potentially allow for, collusion or segregation of duty issues. So we're looking at both sides of the coin there. Is it strengthening or reducing the fraud risks, strengthening the control environment and reducing the fraud risks? Or could it have the opposite and unintended effect of actually allowing for further collusion?
Yeah, that's actually a very interesting point, because often we hear that AI is potentially the solution in some ways to fraudulent activity, but potentially not. Do others have any comments on that particular point or other points in terms of what vulnerabilities there are?
Josephine, it's Julia here.
Hi. Yeah.
So, I'm a senior IT audit inspector with the Financial Reporting Council, which so I'm involved day to day in assessing the quality of audits of public interest entities in the UK. One of the things that I just wanted to pick on, rather than actually answer the question, is the word material, because that's something we haven't really covered much in the conversation so far today. And I think that is really quite important to remember when we're thinking of it from an auditor's perspective, that some of the technologies we're talking about, say some of the phishing technologies, etc., yes, they're used to perpetrate fraud, but we need to think carefully about what can be used to perpetrate material fraud and kind of focus some of our attention in that area.
That's a very good point. Thank you, Julia. Martin, I see your hand is raised.
Yes, thank you. Martijn Duffels, working for the Dutch AFM, the Dutch audit regulator. But in the conversation, I'm here representing IFJAR's Standards Coordination Working Group. I should note that as IFJAR, we haven't really formed a view on the matter. So what I'm going say is more my own thoughts based on discussions that I've had with members within IFIAR than really an IFIAR view. But still, there's a few items that I want to pick on. First and foremost, I think it is important to bear in mind what the public interest perspective is here. And indeed, that's continuing a bit on what Julia said about materiality. I think there is a clear expectation that auditors pick on material misstatements, whether due to fraud or error. So those material frauds should be found. I think it's also important when looking at technology to think of who might be perpetrating fraud. There is a big distinction to make between employee fraud, if you will, whereby I guess technology can really help and can also really help companies in preventing and detecting fraud, versus management fraud, where of course technology can do something, but there is so much more apart from technology that needs to be done. I think it goes without saying, of course, that technology over the past, let's say, 10, 20 years has evolved enormously, but that's on both sides of the coin. That's both for preventing and detecting fraud, but also for committing and concealing frauds. One of the thoughts that I also want to put to the table here is that new technologies not only have exposed new vulnerabilities and risks, and I think a lot of those new technologies have already been mentioned, but especially recent is of course the widespread remote working, which has offered new opportunities for fraudsters of breaking in, and also the more modern connectivity methods we all use. I think also it's important to recognize that technology makes old school frauds, if you will, tampering with evidence, the like, so much probably easier than it used to be, where you had to cut and paste and how to make an invoice look like a real invoice.
Yeah, thank you. I got it. Martin, are you still there? No, I think we lost Martin there. Donnie, I see your hand is up.
Yeah, hi, Donnie Shimamoto from Enterprise Technologies. We actually work in partner with small and mid-sized firms in the US. And we're actually normally working on the business transformation side, so more on the advisory side than the actual audit side. But both of the comments from, I believe it was Julia and Martin, make me think about disclosures. And I don't know if we're talking about that later, but the need for disclosures related to frauds and technology-enabled frauds. And in the US, we've had the cybersecurity breach disclosures that have come as well. So how to ensure that those are being done timely and focus again on something that's material.
Okay, that's a very good point. Thank you. I don't see any other hands up, so perhaps we could move on to the next question, Angela, and maybe do some deep diving in what's going on in audit. So I think that was...
just so you know, I think Wayne just joined us as well.
Oh, Wayne, welcome.
Okay, so yeah, I'll move it to the next slide here.
So now we have heard as well from others and on this area today, how is technology being used to perform fraud-related procedures in an audit? And of course, what emerging technologies do you see being used? And that would be quite interesting one for the participants here to comment on. One of the things I was reading actually was about the EY Helix GL, and it was to that point earlier that was mentioned about the use of AI. And EY are, as I understand, using technology that detect anomalies through machine learning using AI solutions. So that's one area which I thought was very exciting to hear about. And of course, Mindbridge also, the gentleman from Mindbridge, Eli, also talks of the use of AI. So that's perhaps one to kick off, but that might be higher up the spectrum. So perhaps if others could just join in as they see fit. And clearly there's a bit of a misunderstanding on the hands, but just jump in. If you don't know how to raise your hand, I just really want to hear from you. So just jump in if it's not obvious. And let's kick off with question number 1. How is technology being used to perform fraud-related procedures?
So Josephine, this is Callie Devine again. So Helix is our baby, and we've been working on that under various names for 10 years. So that is an extraction of the complete general ledger or subledger. So we have the ability to analyze the information or the transactions from independent perspectives, so that you know, rather than just a traditional procedure where you're looking at, you know, one piece of the information and trying to apply an expectation to it, we continue to layer on that by looking at the information across the business cycle from multiple perspectives. And so you had also then mentioned the AI piece of that. That is sort of a separate application that uses the same data, and it does allow us then to apply procedures and identify anomalies that the human eye couldn't identify based on changes in relationships. So it is about the ability to see more. To, you know, we use the term auditors becoming analysts because they're looking at things continually from multiple perspectives with you know, critical lens.
That's fantastic. And it just out of interest, is that generally used at one point in time in the audit, or do audit teams go into the client data at various points to see what comes up at different points in time?
We have embedded it across the audit. So we extract right during planning, and, you know, again during interim, and again at year end.
Right.
So it is a continual look at their data.
That's fantastic. Thank you. Are there other comments or ideas on how technology is being used to perform fraud-related procedures?
It's Julia here again,
Thanks,
Josephine. So what we see in practice is various tools being used to extract the population of journals, and then either the entire population being interrogated or manual journals being interrogated separately. And then what we generally see is the audit team coming up with their criteria in order to look for what they think might be unusual. And sometimes that could be something that says, let's look for something with fraud in the journal description. And I think over a decade that the auditors have been using these techniques, then probably the fraudsters have gone past using the word fraud in the description. But those techniques do find unusual items, but it's very much technology being used, being informed by the audit team with their understanding of the client's business. And sometimes you kind of think, well, I'd like a little bit more imagination, if you like. So we have seen examples where somebody might say, well, anything raised on a bank holiday, public holiday, would be unusual, and then do a procedure, and then just so you haven't actually found anything unusual because you didn't understand your business well enough when you scoped the test. So it looks like a test has been performed, but actually the scoping wasn't accurate in the first place. So I do think some of the procedures that Kelly was referring to, where you bring some elements of AI in there that's looking for patterns and anomalies to those patterns within the data sets, do offer a lot to auditors. And one of the things when we did our latest thematic at the FRC was trying to think about how those kind of slightly more evolving tools can fit within the standards. Because the ones that we saw piloted, and there are a number out there in the marketplace, we felt offered some promise in there when you wouldn't go down the blind alley of saying something was unusual when it was never going to be unusual. Those patterns would emerge through the use of machine learning.
You know, Julia, I just wanted to comment on something you said about the understanding the business and understanding, truly understanding that particular entity. And one of the important points that we're stressing is the seasoned judgment and experience of our executives. Just throwing technology to our younger folks, who, while they're quite savvy, it is the the seasoned experience of our executives that is allowing us to understand the story that the data is telling. So as quickly as we're trying to move to emerging technologies, we're trying to make sure that it's there's that rich understanding of the business in order to actually analyze it appropriately, as you have just described.
So Kelly, to your point then, whilst the second question is focusing on emerging technologies, I think that what you're saying is that there are other things that we need to think about when we're using technology, such as the skills and experience of the team, and some of the points that Julia was mentioning in terms of some of the criteria that we're applying when we're actually analysing this data, and just thinking differently about that.
Absolutely. So yes, from the design of the procedure to, fully understanding what am I doing, why am I doing this, in order to tell yourself, yes, I achieved my objective. It is a balance. Again, these our younger staff are absolutely fantastic in the technology space, but you do need to have that deep understanding of what is supposed to be happening here in order to understand whether something's gone wrong.
Yeah. No, absolutely. Wayne, you haven't had a chance to speak. I'm sorry that you missed the first question, but I'd love to hear from you on this question, of course, and the previous question, which was just a more general question about emerging technologies.
I was here for the previous question, so I did listen. So I'm an audit partner. I've got a title of an audit partner with BDO. My practice is actually litigation support. So certainly in Australia, I work on a lot of the financial reporting failures and audit failures. So that's my bread and butter. And even looking at technology, or even the discussion on fraud and what is material, will truly systematic technological fraud create material misstatement within the financials? And I'm not sure it does. We've been sitting here with IDEA or all sorts of capabilities for the last 20 years of picking up, supplier bank statements that match with employee bank statements. We've always had that technology. We've always had the technology to look for weird journals. And now the technology is getting better. We've got an AI on it. But if we were truly looking, now my speciality is financial reporting fraud, manipulating revenue, manipulating cutoff, manipulating key matrices. And I struggle to believe that a lot of this technology will pick it up. We are using it. I know we use it. We're all into the bandwagon of the data analytics. But as everybody says, who's actually trying to work out with a dodgy mind how you can actually manipulate data? And if you don't understand how you're going to manipulate data to create a material misstatement, you're going to do a lot of work and you're not really going to find anything, is my cynicism.
Cynicism, or perhaps it's something to Kelly and Julia's point about it's not always about emerging technology, but it's the way you approach the design of the tests and your thinking behind them. So put your fraudster's cap on and think about what are the ways that I could...
And I do love the concepts of the Enrons and the wirecards. Would technology have spotted Enron? I'm not quite sure. You just got to look for the SPEs and non-substantive transactions. when we see the post-mortem on Wirecard, that will be an interesting one, because conceptually, if you'd got the brains to understand how the Wirecard thing's been manipulated, that might be the ultimate when technology should have caught it.
Thank you. Martin, I see you had your hand up for a little while there. Apologies. Do jump in.
Thank you, and sorry for breaking up just earlier. I think much has already been said, although I think it's also fair to recognize that there is a huge variation still in practice in the level of penetration of technology. And that is in part, I guess, because data from companies, obtaining the data is also a challenge. I think another challenge that I want to look at is whether we really understand what the technology does and whether the technology does do that on a reliable basis. And that certainly is important when technology becomes increasingly advanced, like in machine learning or AI environments. I think we can all understand, let's say, the simple filter function in Microsoft Excel, and that's relatively easy. But once the tools start doing real thinking for us, we have to understand what it does, but also we need to ensure that the tool itself is not tampered with, and also that the underlying data indeed is not manipulated or biased in whichever way. And I think the old issue of how do the IT experts cooperate with their financial audit experts, and that relationship and that mutual understanding remains a very big issue, I would say. Thank you.
Thank you, Martin. Do any, on this particular question, do any of our public observers have anything to add to the conversation? I think that's no, Angela. Thank you. Well, we're doing good for time, so if we could move on to the next section, please.
I could add one comment on the emerging technologies one too. I think a lot of what we've been talking about is data analytics against the transactions themselves, but when we start to look at the shift, for example, to blockchain, where we've got some validation or auditing built into the blockchain itself, that there'll be a need to shift to look more at the controls prior to transactions being in, so doing more controls testing and controls testing using analytics as well, data analytics.
Thank you. That's very helpful. Thank you, Donnie.
You know, similar to that, as a, you know, if we're talking about like blockchain, if you're talking about the client's use of AI, when they, you know, we haven't seen, I'm not sure if anybody else has, very advanced AI in the financial reporting processes. We have been able to get after controls. But as they start, as technology changes or rapidly changes over the next several years, and they start using like deep neural networks, what will be our ability to use controls, because the application will be changing, you know, every few days, and what will be the need of data scientists or those that can stress test algorithms to be part of the audit team.
As in, more likely that we'll need to think about the use of data scientists, etc.
Yes, as advanced AI enters the financial reporting processes.
Yeah.
That, I think, then points also back towards the increased focus on IT general controls, like application change controls and the ability to review testing and everything else related to that.
Yes, so it's sort of like a joint responsibility there. How committed will management be to putting in controls that the auditor can ultimately rely on, versus us having to actually, you know, get inside the white box and look at what's going on in the algorithm.
Josephine, is Julia here? Could I add one thing?
Oh, please, yes, go ahead.
We liked when we were doing our thematic was where some of the more advanced tools are being used, the use of visualizations to report on entire data sets. So if you're reviewing the output of an algorithm, and an algorithm gives you a list of, say, 20 items and say, this is the unusual ones, if you're an RI then trying to assess how appropriate that tool is, that's much more difficult to do, in my view, than if you're given a visualization output saying this is how the entire population that we've analysed has come out according to these criteria, and here are your outliers, which are kind of visually able to be seen. And then as an RI, I would potentially feel much more comfortable that I was looking at appropriate notable items.
Thank you, Julia. So similar, yeah, go ahead. This is great. Go ahead,
Donnie. Julia's comment made me actually just think, so if I actually wanted to perpetrate fraud, what I would actually do is do the data analytics and visualizations first, and then use AI or machine learning to interject transactions that looked like clustering or otherwise deemed appropriate, the pattern. That would be an interesting one to detect when the AI is actually used to commit the fraud within the patterns that are expected.
Yeah, and I guess that's down to where your algorithm is sitting and who has control of the data at which point of the process. So if your algorithm is sitting with the auditor and the auditor has control of that data, it's arguably more difficult at that point for personnel of the entity to interject data into that. But it's all things that need thinking about, understanding where your data's come from and how you know it's complete and accurately represents the data set that you took the data from.
Okay, I don't want to cut anyone off, but I don't have any more hands up. So similar theme. So we're thinking about forensic audits. So what current trends are you seeing on how frauds are being perpetrated using evolving technologies for those who have experience in this area? It's probably similar to the first question for this particular group though, isn't it? Does anybody have any involvement in forensic audits and perhaps how technology is being used in forensic audits? That's definitely a no there, Angela, I think. Okay, so why don't we deal with the other question? So we've covered some of this a little bit already as we moved on, but what other information or research related to technology, again, used to perpetrate or detect fraud, should we at the IAASB be considering in determining any future actions on this particular topic? So open field, dive in as you wish. Give us your wish list.
Okay.
Go ahead, Kelly, kick us off.
Well, so I was going to say, when we look at the data, data tells a story, and so what's difficult is that you can see potentially what has happened in the data, but that story is not audit evidence. So there's no clear place in the audit risk formula to say, you've met the requirement of a substantive analytic procedure or a test of details, because what you're doing is data mining, if you will. And how can we take the credit from that and drive down our risk assessment and then ultimately alter our response? Because we can see the quality of a process and we can see that nothing has gone wrong, but we still then have to move forward and get the substantive evidence. And then
so it's how that so it's basically how that story that you've done the work on, how that story then impacts your understanding of the entity or its internal controls, as it were, and then how you can use that understanding in your audit work.
Well, yeah, and sometimes we feel like in lower risk areas that we're perhaps done, but you can't be done. Obviously, you need to move through and get the substantive response when you've likely through your risk assessment driven the risk so low. So it's where does analysis, data mining, if you will, and multiple looks at data, when they don't meet the requirements of audit evidence, what do you do with that?
Okay, yeah, that's helpful. Thank you. And Kelly, I think I interrupted you as you were starting a second point potentially.
I was just going to, this is probably a side comment, but as we develop AI tools, it's difficult to train them to increased or high levels of accuracy, because you can't, we don't share data across clients. So we're always working one client at a time, and you can't, you know, because of our ethical standards. So trying to figure out how we can get tools to a high level of accuracy without, you know, obviously doing anything unethical.
Yeah. Basic to me, with my very basic understanding of this, is how do you further increase the knowledge of the AI when you can't actually share knowledge from other clients, etc., and other client datas.
Exactly.
Yeah. That's helpful. Any other wish lists?
I'd echo the problem that although it's trendy at the moment to say that we're going to do the data analytics and we're going to do data mining, and we can match a dispatch, we can match an invoice to a dispatch note, or we can match you know, an invoice to a subsequent receipt. The fact is that, you know, the fraud could well be just contractual things, you know, the bill and hold, the bringing forward it, having false documents in linked contracts. So there's extreme limitations to, in my view, of whether some of this data mining is sufficient appropriate audit evidence, and it is even giving guidance as to what this data mining and analytics could represent sufficient appropriate audit evidence and where it possibly could not. You know, that would be extremely useful, because we're ticking boxes, we're doing lots. We can tell everybody that we've reviewed every transaction, we've reviewed a million transactions, but as the earlier person said, are we sure that actually means anything? You know, but I think that would be useful to question the relevance.
Yeah, thank you.
Julia here. I still can't find my raise my hand function. I think a lot of that comes back to the understanding the business again. So some of the areas that we challenge audit teams are where they've got underlying ledgers where there could be manual overrides. You know, going back to some of the initial planning discussions, and sometimes I think the fraud conversations that we have with teams are too focused on the journal entry testing and sometimes not some of the other planning activities that are within ISO 240, but perhaps don't sometimes get the focus that they should in terms of understanding where fraud could happen. Some of the other conversations we're having with audit teams are around the non-significant components and what could perhaps go through there in a large group. Just some of the other opportunities that sweeping of cash balances, some of the other things that could happen that you wouldn't get to through doing a journal entry test.
Yeah, that's very helpful. Thank you, Julia.
Can I also make a comment? It's Marcus Kohn from the PIOB. I'm wondering, we are so focused on the data provided by the entity. Is the audit doing something wrong by not using external data, maybe? What is the perspective on this?
Do we have any comments on Marcus's point?
Martijn Duffels here. I think with any information being used in the audit, the question is, how does that information support the evidence that you're seeking in an audit, and is that information relevant, reliable, and the like? And I think with external information, it can be used, but the question then is, how is that relevant for the assertion that the auditor is testing, and is that sufficiently precise, sufficiently reliable, and all those kinds of questions. So I think the audit standards are open, in my view, to also using external data, subject to the fact that those questions that are raised can be answered. And I think that is in practice where a lot of the challenges can be found.
I was actually going down the same thought path as Marcus and thinking, like, could we use external? And then I think we're going to run into some of the same challenges with just getting, same as like getting confirmations. How do we actually get the data in a timely manner and know that we're getting it from the right sources?
Yeah.
You see, I'll throw a bigger general one where I struggle with the profession. If a 737 MAX crashes, everybody in the world looks at how you could have prevented that thing crashing. You look at the black box, and you say, how do we prevent it crashing again? The weakness, as I see massively even in this discussion, we're going to have audit failures. We've actually got a whole box of audit failures in Australia, the UK, wherever. Somebody needs to think and say, okay, we've got a real live audit failure. We've got a real life material misstatement. If we had our time again, could audit technology have detected it? And, we all, too many of what we do is all theoretical. We increase checklists, but we're actually not doing it on a real case. And I think that is the real problem with how we're progressing audit.
I would say I would agree with you, Wayne, that every time we think of an approach or even a tool, we keep telling ourselves, well, we don't, as we're piloting them, well, we don't want to find a fraud. We've got good clients and we've done a good job in acceptance and we don't want to find a fraud. But you're exactly right. How will we know if, how can we have a better chance?
And, this is as the profession, and again to the IAASB, we've got, and all the firms on this call have got their problems, but we as a profession, we as an intellectual profession, should say that patient died, the audit process failed. Can we all collectively, constructively learn from XYZ and consider, was it skepticism? Was it understanding the business? If we'd got an appropriate technology, could it have detected it? Else we're just theorizing and very likely creating products that will not actually, are not fit for purpose.
Thank you. That's almost to the point about looking back at Wirecard when we get all the information when that's concluded, and I'm really thinking about what could have been done, what should have been done differently if something wasn't done correctly, and potentially, as you say, what would be the appropriate technology to prevent that. It won't all be about technology, of course, will it? But what would be the appropriate technology going forward to prevent that?
Or even conceptually, is it possible? If you look at Enron, you look at Carillion, wherever you look, we're talking technology. Could technology help the auditor? And I think in some of them, the answer is no.
Could I make another kind of I think it's a related point, which is one of the things that we've talked a little bit when we've been looking at the use of technology in audits is, does it actually shift the emphasis of effort from to risk assessment from doing test of details or substantive analytical procedures because while we might say, well, we're testing 100%, the auditor isn't. It's analysing entire populations. And again, perhaps the use of third-party data comes through as a risk assessment procedure, where the reliability of that data doesn't have to be as precise, if you like. I know that's not a standards term, but and that actually you can use the technology to do more risk assessment procedures and then focus in your eventual substantive work on the areas that you've highlighted through that risk assessment. And sometimes that means that your technology isn't actually reducing the overall level of work, but it's making it more responsive to what you can see.
And more precise to the risks that you're, yeah.
And that kind of points back towards my comment on the need to do more controls testing.
So you have a much more precise risk assessment procedure, but there is a need to, that informs your controls testing as well.
I think it can, yeah. So you understand where you actually need to have that controls testing. But also it could be a tool to use in a situation where you have poor IT general controls, poor IT related controls, and you have a population of data that represents your financial statements, that you can then use tools to analyze that data. You're not testing it, but you're analyzing it to try and understand the makeup. And that's the circumstances where you can't rely on controls, but that data represents the set of financial statements that you're looking to opine on. And that might be more the case when you're in, hopefully more the case where you're in perhaps an SME situation rather than a public interest entity. Although we do have occasions where public interest entities don't have good IT controls.
Great, well, thank you everybody. We are now out of time, but that's all fantastic information. Lots of this we'll be able to use. It's not all necessarily directly related to the questions, but all still useful. So thank you ever so much. And we will see you in another 10 minutes, I think, Angela. Yeah?
Yep, that's right. Thank you.
Perfect.